Today, I am going through my entire investing portfolio. The original value is $28,000 and the plan is to get to $1 million in the shortest time possible. I am not a professional broker, I'm just a normal person with an ambitious goal. So I started here in March 2020 with $28,000 and currently we are right here at $70,000. It might look like 100% returns, but it's not. I will explain that later. And right here, there is the $1 million. To get to $1 million with the current growth rate of this portfolio of 38%, it could be done in 7 years. This is just absolutely crazy to think this way. Obviously, that would be a huge achievement, and to be honest, very few people were able to do that on the stock market. I will try my best to prove that it can be done. In this video, as we go through this portfolio, I will tell you my short opinion on each stock that I own, whether I think it would be a good idea to open a new position on that stock today. I want to emphasize watching the SPAC part at the end of the video because I really think this is an opportunity of the decade, so please watch till the end. For some of you, to start with $28,000 might not be a lot of money. I also don't think it is a lot of money, but in March when I deposited the money, it was all money I had. I remain to have all my money in the stock market at this moment. And now speaking directly to people who are not able to afford to invest such an amount, I didn't start with the stock market. First, I had to figure out how to exchange my time for money. When you master that, then you can start to think what to actually do with your money. This is what I did when I was 15 years old. Anytime I could, I worked part-time in a supermarket or oil station, building furniture and other 10 manual jobs. Then eventually I found my way to online marketing. Today, I just started to build my own online agency. What I want to say, if you work hard, success will come eventually. The harder you work at the start, the easier it will feel at the end. I can only agree with this statement. Don't get discouraged. There will be a time in the future where you are able to say that you are self-made, and that is something what you cannot put price on. The last thing that I want to say is that I opened my Patreon subscriptions. I find it difficult to share my trades on YouTube. It is just not quick enough. So to have instant opinion about my trades, I decided to create Patreon. Mostly about SPACs, because this is honestly where is the biggest opportunity of 2020, maybe even this decade. You can join me there on my road to $1 million. I will also share my materials there, for example, a daily updated SPAC mega sheet for tracking all the news about SPACs. That will be available soon. Now it's just the best time to go there. I made the best deal for this first month and also for the first people joining. So hopefully see you there. And also this is how my portfolio really looks like. This is what you can see. These are not two companies. These are two investing categories. One could be labeled as a high growth stocks and the second SPACs, the special purpose acquisition companies. As you can see, I'm currently $42,900 in SPACs and $27,700 in high growth stocks, including dividend stocks. The split amount is not totally random. It is very intentional, and later I will explain how this allocation helps me to use margins on some trade. On my growth portfolio, I'm currently on 39.5 returns in the past 9 months. So if it continues to go this way, at the end of the 12-month period, we could see around 50% year-to-year returns. Where it starts to be really interesting is my SPAC portfolio, when I have maybe close to just 24% returns, but over the period of 3 last months. If I could keep this growth rate at this pace, it could get 100% year-to-year returns on the SPAC portfolio. The craziest part is that not just I think that it is possible, but I'm super confident it will be more. So the first stock from a high growth portfolio that I own, and as we go through them, we will get to the highest positions, are two dividend stocks with combined worth $1,984. These are the RAIT stocks. REIT or real estate investment trusts are simply companies that own or finance real estate. What is interesting about that REIT must pay out at least 90 or 100% of their taxable income to the shareholders or dividends, so they cannot really keep some money. It is like you're buying a real estate but without the hustle. The stock BXMT is paying me a 9% dividend and Chimera is paying me 11.6% dividend. The reason why I keep them in my portfolio is because while I'm getting a dividend, these stocks are 30 or 50% below their value before the pandemic. So not only it is a dividend play, I get the high growth potential with reasonable risk. I think this is a good buy for any portfolio that wants to diversify into multiple industries. Next two stocks that I own are Facebook and Google. Both of them are part of FNAG stocks that stands for 5 giants technology companies: Facebook, Amazon, Apple, and Netflix, and Google. And these are absolutely dominating the industry. I bought them both with the March discount, and as you can see, I'm up already by 65 and 75%. Facebook and Google are the stocks I don't mind holding for the next 10 years. In fact, I wouldn't mind adding Google even now. I think Google is a phenomenal company that could in 10 next years become the most valuable company in the world. I made a whole video about Google, so check that out. And I probably wouldn't add Facebook at this current price. And then we have HUYA stock. This is, my opinion, crazily undervalued company. It is the Chinese company traded on a US market. In the first quarter 2020, HUYA grew their profits by 170%. It is just showing how big potential this company has. On the other hand, the reason why this stock is getting beaten is because the potential ban of Chinese companies in the US market. Long story short, I do think that USA and China will come to an agreement. At the end of the day, this doesn't affect the potential of this company has. Again, I made the whole video about HUYA, so check that out. Since I already have a position in this company, I would only look to further dips. I will consider next buying at about $17 or $16 levels. Again, this is a long-term investment. Gaming industry is going to be mainstream and will overcome any professional sports, in my opinion, if it hasn't already. We are getting to my second highest position, and if you are following this channel, you probably already know what company is that. It is one of my most favorite stock out there at this current moment. Even given that I'm currently down on this investment, I believe this company is undervalued, and I plan to hold this company through the whole truck sector revolution. It is a known fact that the most states will ban diesel trucks by 2035. I'm regularly posting videos about HYLN, so check them out. Obviously, in my opinion, this company is a buy at these levels. What you have to understand is the volatility of this stock, and it will continue to be volatile before company prove its value by delivering thousands of their trucks and finishing their Hypertruck ERX technology. There are many people who tried to get rich fast on this stock and ended up disappointed. But this is a Tesla type of investment. This stock will be dead for 1 or 3 years and then it will explode. If you are not ready to hold this stock for a long term, don't buy it. We are getting to the biggest position in my high growth portfolio, and that is Tesla, with 450% gains in the past 9 months, which is absolutely crazy. I never thought that it could grow so fast, and I think no one obviously couldn't tell. I bought it right after the pandemic. I couldn't buy it at a better time. At the time, Tesla was my biggest position. It was the stock that I believed the most. What is interesting about this stock is that if you look at the long-term graph, the reason why it is such a rare investment is because this stock was flat over the period of 6 years and then suddenly exploded. There were only 2 times where you could get this with the best year-to-year returns on this stock, and it was here and here. This stock really gave me understanding of how some of the stocks just need patience. And with some stocks, you can just jump on that stock at the right time. You do risk missing the train. So obviously the smarter way would be not to try the market or the stock if you know that the company is good. And I just accidentally did. There are many channels covering Tesla, so this is why I don't talk about it that much. No one really knows today if Tesla valuation makes sense. Today, it is a great company worth holding long term, but if you see a company surging 600% in 1 year, becoming the 7th most valuable US company, you kind of want to look for the next Tesla. Do you know what I mean? So I wouldn't buy it today for this price, but I'm just glad that I hold it. There are more things about both portfolios. I was adding to those portfolios quite a significant amount of money, and that is explaining why this portfolio is 100% increased even though it has just 36-39% returns. So I will put how much I deposit somewhere on the screen right here. This is actually puts my portfolio in disadvantage because there was about $10,000 which I added last 2 months, and money that I deposit didn't have time to get returns over that period. Now here comes probably the best part of this video. Investing, or should I say trading, SPAC companies. First thing to say, I'm not a professional trader. I would even say my trading knowledge is below average. If you ask me what is an option, few months ago, I wasn't able to tell you. So the reason why I am so confident to trade SPACs is because I went through all company graphs over the 2019 and 2020. The reason why I'm confident to trade SPACs is because I went through all companies' graphs over the 2019 and 2020, and I studied them all. I've read the balance sheets of every special purpose acquisition company over the last 12 months. I do feel comfortable because I know a lot about these companies. Before we get any further, mind that we are getting to a very speculative area, and none of what I'm saying here is an investment advice. On the other hand, I only talk about what I do with my own money, and I'm being 100% transparent about that. SPAC companies are pretty unexplored area in the stock market. So where is the catch and the potential threat? SPACs are constantly changing. A few weeks ago, there was a moment when all SPACs went down 30% without a reason. In the past weeks, they were also up by 30% for, again, no reason. People are in and out. I did a video a few weeks ago where I used strategy that didn't work as I planned. I still had a net positive impact on my account, but the strategies just didn't work. This is why I rethink the whole thing about SPACs, and I came up with only 2 strategies that are historically proven and that also allows you to play SPAC companies in the safest way possible. And I'm going to share all that with my Patreon members. Link is in the description, and eventually even here on YouTube. It just takes time to create all these videos. Okay, and here is my current portfolio of SPAC companies that will give you a good idea about my first strategy of how I actually trade SPACs. The main thing to take from this SPAC portfolio is that I buy companies before the merger is announced. And I also only hold warrants. Warrants are very similar to options. They are giving you bigger exposure to whatever the outcome is. You can win or lose more compared to what you would with a regular stock. This is a list of warrants that I actually hold right now. You can see that I'm up by 53% on SOAC. This is the SPAC that I actually made a recent video about. I'm also up by 74% on ALUS and up by 123% on SSPK. Rest of the warrants are plus minus even so far. All these companies are waiting for a merger. I don't want to hold companies after the merger or even after the merger is announced. There are exceptions like HYLN and probably more to come, but it will be very rare I would keep the company even after the merger is announced. If so, I would move it to my high growth portfolio stock, you could say that I'm missing on potential gains, but this is really just a bigger picture of making assets more effective somewhere else. Again, it is not random, but a calculated decision. I don't buy warrants randomly. There comes a lot into why I buy what I buy. Just a fraction of that is the price of the warrant. There is a certain price I'm ready to pay for a warrant because the higher you buy, the higher is the risk of losing money when there is a merger that is not according to expectation of the market. For example, I bought SOAC for $1.3 per warrant and it is now $2 without announcing a merger. I would not buy this stock for $2 per share. It is just too expensive. But I don't want to lock profits either because the merger is not announced yet. Now it might look easy because I'm up on 3 mergers already. But I've already held warrants before the merger that went down 30%. It can and it will happen. Person trading warrants have to have a stomach for that. You could have many objections to this strategy, but the data just shows that the potential is simply much higher than the downside. So this is my SPAC portfolio. I have one more warning for you guys. Don't get greedy. SPACs might give you the feeling of making money easy, but it is not. Sharks smell the blood in the water. It will not be always like that. The way SPACs are traded will change in a few months or years. Without adapting strategy, I believe a lot of people will eventually lose money. And with that, again, consider joining the Patreon. We can create a community that is smart enough to see the change of the market before it will actually happen. I will be cold dead inside, trading my way to 1 million until there is no opportunity left in SPACs. And with that, thank you for watching. By the way, subscribe. There is only 2 ways what will happen on this channel. I will either lose all my money or I will get to 1 million. Nothing in between. So I think it's going to be fun to watch this either way. So see you guys next time.